Welcome to Technical Market Insights, where we're going to look at the markets according to the charts. My name is Anthony Calhoun. I'll be your host. Make sure you hit subscribe, turn on your notifications. You probably missed some stuff last week if you aren't subscribed. We posted some charts on Tuesday, which every Sunday we actually post a stock market update. So if you weren't subscribed, you didn't see the video on Tuesday, you missed out on some good buying opportunities there. And we're going to start off today. We're going to go over what we went over last week, kind of what we called versus what actually took place, which is actually exactly what we called. And then we're going to go over some scans, some buying opportunities possibly going into the week. Not much out there, but there's always some place to put your money to work. So if you look at SMH, which is the semiconductor ETF, we went over the weekly chart last Sunday. This is the daily chart. As you can see, it's making lower highs and lower lows in the weekly chart, which we called back in July 16th, somewhere right around here. It's a good time to exit any semiconductor positions. And as you can see, that followed through very well. As far as the resistance goes, I mean, we're at testing all-time highs. And last week we expected a green week and actually possibly a green October if you look at the monthly chart, because this weekly chart is going to bounce. As far as I'm concerned, we may see a few green weeks. I'm expecting it to hit this top trend line right here, and we'll see a pullback and probably follow through that channel. Let's take a look at the monthly chart so you can see what I'm looking at. This right here was huge when looking at the charts on every ETF out there. As far as like DIA, SPY, everything, if you take a look now, was pretty much at all-time high resistance, which is time to be very cautious. But we're getting down to the 20 SMA, which is simple moving average, on most of the monthly charts as far as SPY, DIA. But if you look at SMH, we still got some ways to go, which is why I call we could see semiconductors ETF SMH hit right around 120 and would actually be healthy for the overall market. So if you look at the weekly, it's oversold, and that's when I said last week I could see a few good green weeks going through October. May even probably see a green October. So it's okay to see it. I mean, look at these charts going down. You see green bars. Every bar in the monthly chart is a month. Obviously, every bar in the daily bar is a day. Weekly is a week. So you'll see green bars as it goes down. It's not uncommon. Nothing goes straight up. Nothing goes straight down. So I'm expecting to see a green October, and we'll probably see a continue November, December decline. That's just my personal opinion. Remember, all this is for educational purposes. It's not financial advice. I've been doing this for almost 23 years coming up, just trying to teach everybody what the best things are to look for so you don't make the same mistakes I've made over and over again. So if you look at the daily, once again, we may see it wouldn't surprise me if next week was another green week. We'll have 2 or 3 green weeks in October until we hit this upper trend line. Now, as far as DIA goes, which this is the Dow Jones, really we were watching to see if this bounced off the 200-day moving average, which we went over last week. It actually crossed under it, which was very disappointing, because anything under the 200-day moving average is a no-go. Won't trade it, won't touch it. I need to see a couple swings over the 200-day moving average before I actually jump in and start placing trades or long-term buys, which, watch last week's video. There's plenty of examples in that, and I'm sure we'll go over more in the future. Now, SPY, good thing is it held the 200-day moving average. What I like doing on my trading accounts is actually only trading the leverage version of DIA and SPY, because it's safe love taking minimum risk with the most maximum positive profit, which if you use the leverage version, SPY and DIA, you're going to do 3 times what this moves. So let's say if you bought this when it was oversold down here, right around this area, let's say this comes up, touches the 50, if it does 4, SPXL, which is the leverage version, is going to do about 16%. So if you can get the maximum return out of just trading the major ETFs, DIA and SPY, why trade anything else? Don't trade crap, don't hold crap, don't trade options. You're risking losing everything you put in. Yeah, you can make money, but how long is that going to last, right? Because you can lose everything you put in. So going back to what I said, we're going to go over what we touched on last week, which was, the weekly charts and monthly charts on those two. But some of the calls we looked at last week as far as single stocks, let's take a look. So these are the ones you miss. If you don't follow the channel, you missed these on Tuesday. BWXT, right? I posted a video on this. This is one of my favorites in my long-term account. If you check out Project Peel, Truzo Fuel, you'll understand why. I was actually telling people to buy this since back in January, which would be up probably 30% from the original buy. Yeah, 32%, somewhere around there. Anyway, it's oversold. We add this every pullback. Plan on holding this stock for 10 years, so I'm not really trading it. But anyway, that showed up on the scans. As you can see, we run a lot of scans here. We went over in the first video, and we'll continue to go over. But as far as last week, Dell was one we called. I think that's the only one you would be down on because we put these out on Tuesday. So you'd be down roughly 1.41% in Dell, which is always, you never go all in on any type of trade or investment, okay? For instance, if I'm trading a single stock in my trading account, I might do 20% on the first, maybe 30% on the first entry on what I want to trade. If I'm using my whole account, just making one trade at a time, doing 20-30% of my account, that allows me the ability to scale in. If I don't need to scale in, great. And I'm sitting on 70% cash, and I'm able to scale in and manage that position. This one right here, this is one that I would have scaled in on. That's why we don't go all the way in. That's how people get slaughtered. So on Tuesday, it was oversold right around the 50. Always like them touching the bottom Bollinger Band, which just didn't do yet. As you can see, it did go through it and bounced right back above it. But on Wednesday, we would have added, it hit down 5% unless it opened. So we would have bought that up. Our average would have been probably right around 36.70, just to say the least. We would have went in 20 or 30%. We would have probably added another 20%, and we'd be up, get that line right around 3%. And if you didn't even average in, you'd be up, average down, you'd be up 1.6%. Now here, that's not a lot. That's not get rich overnight, which is not what we're trying to do here. We're trying to grind out profits over the long term. 1.62% in 3 days. Put that in the financial compound interest calculator. See where that gets you over time. What else? We looked at OHI, which I like this a lot, mainly because of the dividend. The overall business model. Would have definitely put this in my long-term investment account. I didn't. It's because I'm really only adding to certain positions right now. But if you would have bought this on Tuesday, you came out with that video, you'd be up already almost 4% and a really good, you can see everything moves up and down, but I think this will start trending upward. Pays 8.2% dividend. That's really good as far as dividends go. Lilly is another one that we actually talked about this last week in the stock market update video. So you would have caught this one in the video, the rest you would have caught on Tuesday. But Lilly, last time we notified Lilly was right here. You can go to makecashwork.com and see that article. And that ran, I mean, as high as 40% within 2 months afterwards. Notified it last Sunday for being oversold. You know, if you would have bought it Monday, going into Monday, you'd be up almost 6% in Lilly, which is, I mean, this stock, if you would have been adding it every time it's oversold, you're doing well in Lilly. A few others we kind of looked at last Sunday was APO. This is an asset management company. Another one that came out oversold. Let's see, I mean, all these are up anywhere from 2 to 5%. This one we've notified so many times every time it's oversold. But let's see, where would we be at there? You would have bought that. You would have bought that Monday. Be up almost 6%. Guys, have a strategy when you enter something. Know what you're doing. Keep it simple. That's why the books I've wrote are called Simplified Profits. Every time we buy, we got certain very small checklists we go over. Stock's got to meet a certain criteria, and then you leave money to manage that position. It's very simple. So that's what you missed last week. As far as what's going on, what are we expecting in the future? Let's look at a couple stock charts. We've kind of pre-scanned. So last week I tried to go over everything that was popping up in our scans, and there was over 120. Actually, it was 170. There's 120 now stock charts coming up. So I run scans on the High Cap 1000. I go through them, pick out what I like. And these are the only two that really showed up as far as bullish charts that have pulled back to the oversold condition. If you can't look at that chart and tell it's bullish, I mean, higher highs, lower lows, and it just trends up, right? I don't want crap falling off a cliff, going down consistently. I don't own bull crap in my portfolio, and that's a very easy way to outperform the market. If it's under the 200-day moving average, if you take the Dow Jones or if you take SPY and you bought every stock in there, but you left out everything under the 200-day moving average, the majority of the stocks, and then you sold anything that went under the 200-day moving average, you're going to outbeat the market, guaranteed. I haven't done it, so I can't really say specifically, mainly because I only focus on a certain amount of stocks. I don't overtrade. But if you keep only stocks in a bullish trend, that's what I'm saying. Even passive investors, you need to learn how to read a chart, because if you're averaging in on something that's trending down, you're throwing money away. So this right here, love the chart. Great opportunity right here as far as I'm concerned to enter VST. May actually enter that in a trading account or long-term account. If it just goes up to 8%, 9%, or if it goes up to its previous highs, you're looking at 8 or 9%. All right, then you got FTI, which is another one. These are really the best bullish charts I've found oversold. And of course, I'm only looking at the High Cap 1000. Okay, I don't own penny stocks. I don't trade penny stocks. I don't do anything that's speculative, any type of garbage stocks. I try to stick to the high cap, high quality stocks. So bullish charts, I keep it very simple. So right here, this is a great buying opportunity as far as I'm concerned. Now, when I did look at the PE on this company, it was dashed out. So they might not be making any money, which I don't like taking risk in companies that ain't making any money, but they are overweight by Morgan Stanley, I believe. Check me on that. And if it heads back up to its previous highs, you're looking at a 13% gain. It may take a month or two, but it's a decent gain in a month or two. All right. If you're looking for a get rich overnight channel, this ain't it. All right. We're trying to grind out profits, trying to compound profits over a long period of time, and continually beat the market. We don't compound losses. We don't trade garbage. We just don't do it. Just looking at some of the other opportunities popping up over my scans. IBM, oversold. That actually don't look bad. If you're an owner of That just popped up over the 200-day moving average, which is a green line on my chart. We actually notified this a while ago. This is Berkshire Hathaway, Warren Buffett's stock. So I believe if you go to makecashwork.com, I posted 13 stocks that are oversold worth owning. That was one of them. Well, you would have definitely had to average down because that was a little bit ago. So that was probably right around there. It's dropped about 5% since then, but that's why you never go all in. So many investors and so many traders that try to get rich overnight, they go all in on the stock, they watch the stock drop, they either continue to be a bag holder or they lock in their losses or wait to hopefully take profit. Keep money aside so that way you can manage that position. If it drops 2.5%, you add more. Maybe you wait till it drops 5%. Whatever strategy, you got to have a strategy when you enter a stock for your exit, and have the strategy to take profit. Don't have a strategy. Stop losses. I'm not a stop loss guy because the last word in that, losses. I don't like losses. Once you get okay with taking losses instead of learning how to manage the position and make a profitable trade, you start compounding losses instead of compounding profits. We're trying to compound profits. So that wouldn't be a bad buy. Anything, I mean, it's Warren Buffett's company. I should say enough. There's not much else out there. Now, if you go to the bullish ETFs, okay, there's not many that even come up. 18 come up. Now, if I look at what's oversold, a lot of them is the cannabis sector, which just is a sector that I'm getting ready to start adding in my long-term investment account. So I keep a long-term investment account and a trading account. I keep both because if you got a long-term investment account, and let's say you lock in profits in your trading account, but yet the market keeps going up, that keeps you from wanting to jump back in and the fear of missing out. FOMO, right? A lot of investors die from FOMO, should I say, mainly traders, because they don't have anything taking advantage of the continued uptrend. So if you got a long-term investment account and the market keeps going up when you lock in profits, you're going to keep making money. You're going to be more patient with your trading account to make a re-entry. But the cannabis sector has, I thought that was the same thing. No. This is one. A lot of them are looking the same. I think Sundial was one. It ain't coming up because it dropped back under the 200-day moving average. So that's interesting. Let me look at a single stock I've been kind of watching. That's not it. Green Thumb Technology. So this is one oversold. So if you look at the cannabis sector in general, on my long-term investment account, I like to look at things that might give me 10x in 10 years. The cannabis sector is probably one of them. Like if you look at this, but as you can see, it crossed under the 200-day moving average. I ain't touched it since it's been out, but it's starting to cross back over. And once it makes a cycle, 1 or 2 cycles above the 200-day moving average, I catch it oversold. I'll start making a position in the cannabis sector. As of right now, you go to right here, nuclear energy. That's something I've been adding since January. NBWXT. Okay, this is the ETF. It's just pretty much steadily making swings above the 200-day moving average. This is something I believe, if you really look at clean energy in the next 10 years, I think nuclear energy is going to be a big part of that. And would have been adding to this Tuesday or Wednesday. Personally, I'm in BWXT. I'm going to start building a position in NLR. Probably should have added it Tuesday, but be patient. I ain't too worried about it. So right now, moving forward as far as next week, DIA is off the table. These are 2 single charts, which I like VST better. It's because they are, I believe, trading at like an 8 PE. Check it on your brokerage, and they pay a bigger dividend. I believe it's almost 3%. It might be more than that. possible 8% swing up, FTI. So even if I'm making a trade, just in case you get stuck in a trade, you keep averaging low. You want to make sure the company's making money and hopefully paying you a dividend. All right. FTI, I don't believe is doing either. Might be a very low dividend. Check it on your brokerage. But you do have a bigger swing opportunity than that, about 13%. If you look at the last highs. So oil is actually something we got into last week and looking forward. So it broke out. I called the breakout here. It ran about 10%. Now it got oversold, which I hate trading commodities. I try to never trade commodities. I know nuclear energy is one, but I'm looking 10 years down the road. Looking 10 years down the road at oil, it's probably going to be less used. It'll always be needed, but anyway, if you look right here, let's say you got in USO on Tuesday because it hit oversold. A couple of things I like to watch. The bottom Bollinger Band. I much prefer to touch the bottom Bollinger Band. All right, which it didn't do. And for that, the stochastics to round up a little bit, which it didn't do. But let's say you bought it anyway because, hey, it triggered a oversold alert. We had a 5.43% drop on Friday. Now, I would have waited because anytime a gap down, you want to wait a little bit before you touch them. Don't touch a gap up or a gap up if you want to play the breakout. You can go long on a gap up. I definitely wouldn't short it. But as far as buying a gap down, I give it a little bit of time. So I would have probably waited really till about Thursday to average down my position. So if you would have bought on Tuesday and waited, you've been down about 7%. So that's why you never go all the way in. So if you would have went 20-30% of your portfolio in on Tuesday, let's say you would have added another 30% of your portfolio on would have been Thursday, you wouldn't have been, let's see, I think it's roughly 7% down. You'd be more like 3.5% down. So if this does, which I believe it will, recoup, I mean, you easily still lock in profits. That's why you keep money to average your position down so you can lock in profits. If that would have, let's say you would have set stop losses, that might have took you out. You might have just lost 6%. Then you would have jumped in your other one, set stop losses, lost another 6%. No. Keep money aside so you can average down your positions and make money. So as far as everything goes, SPY, I still got the same outlook I do as far as last week. We're going to see some green weeks because the weekly chart is oversold, as you can see down here. Would not surprise me if we see an entire green October. And everything, if you drew a line right down here like we did on SMH, we'll probably see that bounce back up to the 200-day moving average. But if you look at the monthly charts, it would be very healthy for the monthly charts to pull back quite a bit, honestly. On some of them, it needs to hit the bottom Bollinger Band. As far as semiconductors go, it'd be healthy for it to hit the 20, just because it'd be a huge pullback to hit the, let's see, yeah, another 40%. I doubt that's going to happen in semiconductors. As far as SPY goes, you're looking at another 15% or so. Only thing under the sold off on monthlies right now is biotech, which I hate biotech. So honestly, I'm not touching it. I do look at it for trades periodically. Wouldn't touch it though. Oil, if you look at this, it's oversold on the monthly, overbought, I mean. So man, hate trading commodities regardless. hard to say really, because the weekly and monthly both look like it should pull back. With the daily's oversold, so we'll probably see the daily actually bounce up, and may see the weekly and the monthly actually pull back. Due to the weekly and the monthly, I wouldn't be making any long-term positions right now. And that's really it, ladies and gentlemen. If you got any questions, leave it in the comments. If you'd like to see anything else, I don't care to even run scans on stocks below 10 if you want. Actually, I think I got one already made. It's based on somebody's bullish under 10. So that's all that comes up in the high cap 1000. That's the weekly. Let's go for the daily. So that's a bullish chart under 10 bucks for you guys. Well, I think I set it to 11. Yeah, I mean, paper and paper products. If I had to buy part of a business right now, it wouldn't be one in paper and paper products. But for some reason, it is a set up bullish chart. So if you got any questions, like to see anything different, maybe you just think I'm half retarded, just post it in the comments. Tell your friends, hey, check this guy out, or hey, this guy's half retarded. You might want to watch him for entertainment purposes. Really, I'm just trying to hopefully educate people on very simple techniques to actually beat the market. Right? Everybody hopes to get 10% a year within 7 years, double your money. With this simple strategy, by not trading trash, scanning, looking at bullish charts as oversold, or just only buying SPXL, which is the leveraged version of SPY, or UDOW, which is the leveraged version of DIA, when they are oversold over the 200-day moving average, you can easily double your money in a year, 100%. Now, if you like, this is right here, Simplified Profits Traders Edition. This is how I handle my trading account. This is how I handle my long-term account. So if you'd like more information on that, you can find those books on Amazon. Just search Simplified Profits. Find these covers. You're good. Otherwise, tune in every week so you don't miss these games. I'll leave some easy scans. And hey, like I said, maybe I'm just retarded. Tell me in the comments. Other than that, peace.